Hey everyone, Coach Investor back on our video for today. So let's talk about the three stocks under $10 that I think are worth your while right now. Now, by the way, just because it is under $10 does not make that company automatically cheap. Yes, it is cheap based on just the price that you're going to pay. So it's just under $10. So that's cheap, but valuation wise, under $10 can still be more expensive than a stock that is costing you $100, $200, or maybe even $500. Now, if you like what you're seeing right now on the screen, most of you probably seen this already in countless videos on this channel, but you can check out the link down in the description right now. Instead of 10% off, you can have 20% off. It's Coifin, one of the best platforms around. I highly suggest you go check it out. There's also a free version, so go ahead. Now, stock number one I want to talk about is New Holdings, New Bank. We've talked about that a couple of times on this channel already. Currently, one share will cost you $6.81. Its market cap is $32.30 billion, has a forward PE of 24.2 times. Year to date, it is up 67.3%. In the last 6 months, it's down 6%. Now, if we look at price to earnings, price to sales, and price to free cash flow now versus its mean, you can see that it is currently trading at a, let's call, a discount from its mean. Now, the current estimates for sales growth in fiscal year 2023 is close to 60% growth year over year. Then fiscal year 2024, 23.84%, and fiscal year 2025, probably not that many analysts projecting that far, but we're at 26.82% growth. If we look at EPS for fiscal year 2023, 347% growth. Fiscal year 2024, 55.55%, and then in fiscal year 2025, another 63.47%. So quite a remarkable growth there at the top and bottom line. Now, one of the main reasons why I like companies like New Holdings, like Mercado Libre, is because of the huge opportunity in Latin America. So as you can see right here, Latin America's 660 million people and $6 trillion of GDP would make it the number 3 economy if it were just one country. Of course, it's not, but Nubank and Mercado Libre as well operate in various countries in Latin America. Now, if we go and have a look at their recent earnings report, it was another pretty good one, or you might say, if it was such a pretty good one, why was the stock down from $8 to $6.8? Well, at $8, it was a bit overstretched, as you will see in just a second on the graph. But as you can see right here, deposits are at $18 billion. That's a 23% year over year growth. So pretty remarkable there. Then we have a look at the overall numbers. I mean, it continues to be the world's largest digital banking platform. It has 83.7 million customers. That's up 18.4 million year over year. 48% of adult population of Brazil, 82% monthly activity rate. Revenues are up 60% on an FX neutral basis year over year to $1.9 billion. Gross profit is up 113% with a 42% gross profit margin. Net income sits at $224.9 million and adjusted net income at $262.7 million. And here you can basically see the growth rates for customers, revenue, gross profit, and net income. I mean, it's quite remarkable how fast this company is growing. Again, this is because of great management, good execution, and growing in growing markets as well. Now, I could go on and on about New Holdings in this video, but we still have 2 other companies we need to cover, so I'll probably make a separate video just talking about New Holdings. Now, looking at the graph, as I said previously, around that $8, as you can see, we were overbought, and so we did blow off some steam. I would say have some buy orders closer to $6. Of course, the 200-day moving average will be crucial. Let's see if we can try and hold it there and then continue, form a base, and then move on to the next quarter. But overall, everything under $7 right now, especially with the current growth rate. I mean, for the long-term investor, this might be a steal. Up next, company number 2 is a company I talked about, I believe, just over a month ago, and that's ticker symbol HIMS, company Hims and Hers Health. You will pay $6.53 for just one share. Market cap of just $1.38 billion, trades at a forward PE of 30.5 times. Year to date, it's basically flat, but in the last 3 months, it's down 28.6%. And actually, since its peak not so long ago, it's down close to 50%. More on that later on. Currently, of course, looking at PE, you will see it only starts here, the comparison, the mean only starts back in February 2023, but still it is quite lower than its mean before. Same with EV to EBITDA and same with price to sales ratio. If you want to focus solely on price to sales ratio because, well, PE right now doesn't really make that much sense, then you can see that the mean for price to sales ratio in the next 12 months was 4.5 times. We're now at 1.5 times, which is pretty cheap, especially for a company that is growing as fast as HIMSS. As you can see right here, sales estimates for fiscal year 2023, 60% growth, then 2024, close to 24% growth, and then 2025, 21.5% growth. If we look at EPS for fiscal year 2023, there is no growth here because, well, the difference between fiscal year 2022 and 2023 is immense. We go from negative 31 cents to positive 17 cents. But then in 2024, we see 70.9% growth. And for fiscal year 2025, 75.21%. So quite remarkable. Now, looking at the graph real quick before jumping into the latest earnings report, as you can see, back in May, we were closer to $12, $13, which means we're down 47% since then. Now, yes, currently it does sit in no man's land. I put this support line back just over $7. I thought that would hold. Currently, that's not the case. RSI is pretty low, but not oversold yet on a weekly basis, and MACD is still pretty bearish. Now, looking at their latest quarterly earnings, as you can see, 74% subscriber growth, revenue growth of 83% and 12% adjusted EBITDA margin growth. We can see here that 90+% is recurrent revenue, 75% plus is gross margin profile, and then it's less than 1 year payback period. If we look at the markets that they're playing in, plenty of markets, but plenty of markets still available for them to go in. And one of the, of course, topics right now is the weight loss market. And that's a market that they will be launching in soon. Whether or not they will take a lot of market share remains to be seen, but it is quite a big market. So even if it's just a small percent, it's going to be extremely lucrative for this company. Now, one thing with HIMSS is that for them to attract more and more customers, they have to spend more and more on sales and marketing. So seeing that the subscribers using personalized solution at the end of Q2 is just over 20% is quite nice. Of course, we need to see that number go up over time, but the more personalized things get, the better it will be for retention and just making sure that in the future you will not have to spend more and more on sales and marketing to attract more customers, but also to make sure that the current ones are staying with you and not going with another competitor or an over-the-counter solution. By the way, if you want a first look at HIMSS, I did that. That video will be in the top right corner. And if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not. We're well on our way to reach 30,000 subscribers. So thank you very much for all the support. And if you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. Now, stock number 3, and yes, this is the final one, and I am throwing a bit of a curveball here because, well, it is Adyen. We've talked about that in the 4 stocks to buy in the month of September, but back then I did show you the one on the Amsterdam exchange. This time I'm showing you the one in dollars. And so the price here is $7.84. In euros, it's actually 738.9 euros. So yeah, depending on where you buy this stock is going to depend how much you are paying per share. But overall, market cap stays the same and the fundamentals as well. So market cap here just under $25 billion, forward PE 32.8 times. Year to date, it's down 43%. In the last 3 months, it's down 54%. We've talked about that in the last video. The reason is, of course, the latest earnings report, which is a semi-annual report. So they report first half and second half, not in quarters. Growth rates are slowing down. Of course, the fintech space, we've talked about that with Block, with PayPal, etc., etc. It's a bit brutal right now, but that's when the opportunities arise. So looking at PE, EV to EBITDA, price to sales, price to free cash flow, you can clearly see that right now it is trading at a discount compared to its 5-year mean. Now that said, I don't want to say that beforehand, this company was basically always trading at a huge premium. Great management, great product, great market to operate in as well. But yes, right now you could say it is much cheaper than before, but before it was just basically overvalued all the time. But I think that right now 50% hit is a bit much to ignore. So a quick recap here, processed volume for the first half of 2023 was 426 billion euros. That's up 23% year over year. Net revenue was 739.1 million, up 21% year over year. And then EBITDA was 320 million, that's down 10% year over year with a margin of 43%. Now you might say, oh, decelerating growth, etc., etc. I was expected maybe 10% growth or something like that, but no, it's still above 20% growth here, so still quite good. And I mean, the expectations for the coming years are also above 20% growth for sales. And then for EPS, yes, this year taking a hit, just 10% growth, but then for the following 2 years, it's above 25%. So again, take advantage of the big hits, but only if you think it's a good company and the market has overreacted. And last thing I want to show you here is basically this. So processed volume, as we've seen, was up 23% year over year. Of these volumes, total point of sale volume were 67 billion euros. That's up 49% year over year. And here you can see free cash flow conversion ratio was 77%, with capex at 7.6% of net revenue. Now, with Adyen, they are now investing way more in their business, hiring more for their sales team. So where other companies are now maybe not hiring as much, cutting down costs, etc., etc., Adyen is in a pretty good position to invest more in their business to take advantage of the current situation. And so when the market turns, they'll be ready to take even more market share. And so looking at the graph, of course, huge drop here after the earnings report. I mean, it is oversold right now, and a weekly MACD is still extremely bearish. But to me, I mean, we're reaching the point where it was back in the pandemic, right? The huge crash back in March 2020. To me, it becomes very close to a no-brainer, in my opinion. So that will be it for this video. These were the 3 stocks to buy under $10. Of course, I can talk about other stocks such as SoFi, but I think we've talked about SoFi a bit too much on the channel lately. So I wanted to show you some other companies. Of course, do share your thoughts down in the comments below. What other companies under $10 are worth looking at? Let me know down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.